And Anna, can you pop us over to the next slide, please?
Yes, ma'am.
Fantastic. And one last boring thing to get out of the way. The information given in today's presentation is not legal advice or legal opinion and should not be construed as such. Please consult with a qualified legal counsel as to fit your particular needs. Anyways, now that I got all that out of the way, I'd love to introduce you to our fantastic presenters. First, Anna has worked at the credit union for over 10 years with the financial wellness team for 4 years. Anna is a certified counselor and says her favorite thing about working for the credit union and the financial wellness team is giving members proven solutions as they struggle through financial difficulties and challenges. And then next up is Mike. Mike has worked at the credit union for almost 5 years and with the financial wellness team for 1 year. Mike is a certified counselor and says his favorite thing about working for the credit union and the financial wellness team is giving their members proven solutions as they struggle through financial difficulties. Mike and Anna, I won't go far, but the floor is now yours.
Thank you so much, Sutton.
Thank you, Sutton. Okay, let's go ahead and get started. We're going to get started with a poll question, okay? Now, according to Statista.com, what is the most popular New Year's resolution for 2026? And A is to save more money, B, eat healthier, C, to exercise more, D, to lose weight, to spend more time with family and friends. Pause a moment so we can get a consensus there.
I wish there was an all of the above option because
Right.
that's me.
Same.
Well, you have to focus on just one to make sure it gets done. So you just focus on one, it's best.
Very
is
true.
true.
Baby steps.
Mike, what is your resolution for the New Year's then?
You know, I would love to be able to lose weight, but it's hard when I like to eat so much. But that would be probably number one, lose weight.
Okay. See, I feel the same. What about you, Anna?
I would say to exercise more. I
Okay.
used to do it a lot a few years ago, and now my knees are cracking, my back hurts every day, so definitely
Gosh.
something to get my body moving more.
You're still
That's
young.
like that's too much information there. Huh?
Sorry,
It's
everybody.
okay.
Let's just be real in 2026. How about
Exactly.
that?
Let's be real.
Sutton, what about
Right.
you before I let everybody know what our audience chose?
I have to pick a small goal because otherwise I know I won't accomplish it. My goal in 2026 is to stop buying lunch at work, which I've already failed at because I bought my lunch yesterday. So guys, we're starting off great, starting off so strong. But
There you
Sarah,
go.
what are our attendees saying?
Alrighty, looks like 19% said A, to save more. We had 0% said B, to eat healthier. I'm with them. And then 25% said to exercise more. And then the majority, 53% said to lose weight. And we have a small 6% said E, to spend more time with family and friends. So
Awesome. You ready to go on to the next slide, Mike?
Yeah, let's go to the next
Let
slide.
me click it for you. There you go.
Okay, so this is what we had for the results. Now, what I'm showing here, the correct answer, probably the majority of the answer was exercise more, which sounds real good. And that sounds like a great goal to have for the next year. But let's concentrate on save more money because for this particular seminar, we want to go ahead and concentrate on how we can help you to save more money. And so we're going to start with that. Okay.
That was the second most popular for
Yes.
New Year's resolutions 2026.
Yes, exactly. Okay, let's go to the next slide. Okay, read about the agenda. The top 5 financial resolution ideas for 2026. First one, save more, manage my debts, create a spending plan for retirement, increase financial knowledge, and at the end of that, we'll have a Q&A session or question and answer. Now, we're going to share ideas on how you can save more, how you can better manage your debts, how to create budget by spending less or making more, planning for retirement, and increasing your financial knowledge. As mentioned in the introduction, we'll pause for questions and we'll wrap things up with a Q&A session at the end of the presentation. Now, There is probably a lot to cover here, and Anna and myself, we discussed it a little bit. It probably a good thing to just maybe choose one or maybe two items to concentrate on this year, because we're going to be talking about a lot of things. And so I guess I'll pick out the best things or the things that you're most important to you personally. Okay.
Exactly. Yes. So we want to focus on just one or two, not try to overwhelm ourselves. There's a lot of information today, but you pick one or two that fits more your life or your goals for at least 2026. So let's move on to the next slide.
Well said. All right. So in the next one, resolution number one, and that is save more. So the little things add up. Okay. I think we all know that. So define a purpose of your savings and set SMART goals. And we understand what that SMART acronym stands for: specific, measurable, achievable, relevant, and time bound. It's important to do that as you set up your goals. Now, the very first thing it talks about, check your savings and checking accounts to make sure your money is working for you. While 0.42% and 0.07% APY are the current average interest rates on savings and checking accounts, respectively, many banks and credit unions are paying more for your deposit. So you want to shop around and make sure you're getting the most out of the deposit that you are putting in, because obviously you want to try to get the most interest. You're talking about credit cards. Credit cards, so long as you pay your balance at the end of each month, many credit cards offer points or cashback bonuses just for using their card. For example, the credit union has a rewards card that allows you to earn points that you can put towards name brand merchandise, travel, or gift certificates. Many people save up those rewards for the holidays to make their gift purchases with them. And then check your tax withholdings. While it's nice to get a refund come tax time, basically that means that you let the government use your money interest-free. If you decide to make changes to your withholding, you will have to submit a new W-4 form through your employer. Okay. Rewards programs allow you to earn benefits for common behaviors: Target, Kroger, Albertsons, Groupon, for example, and Target. These are all things that can begin to add up. Your interest will add up. The money maybe from your credit cards, and all these things, all these different bonuses will begin to add up. And so when you put it all together, it comes out to be quite a bit. Now, this is most important to me, because we want to find out how the credit union can help. The credit union has many products and services to help you achieve your savings goal, included but not limited to setting up automated deposits and savings account. Many of our members divide their paycheck between multiple accounts, and sending a portion to your savings account can help you to resist the temptation of spending it all. And if you automatically place that in your savings account, then a lot of times you won't even know about it, okay, which is great. Our online banking platform allows you to hide accounts from view, out of sight, out of mind, can help avoid the temptation to tap into your savings. If you don't know it's there, it begins to pile up much quicker. Other products and resources can also help. Share certificates, Dream Plan share certificates offer opportunities to lock in a rate for a certain amount of time, typically a premium over current savings account rates. IRAs are retirement-specific savings accounts that allow you to reduce tax implications, either traditional or the Roth IRAs. Covered education savings accounts are tax-deferred accounts specifically for education. Emergency savings account. Let's talk more about the importance of the emergency savings account, because I have a slide just for that.
Now, Mike, I did want to touch on something real
Okay.
quick. For the Dream Plan Share Certificate, that is my favorite type of savings accounts that we have here. Back in, when was it, 2022, my resolution for the year was to open a savings for my newborn and continue to add monthly. With the Dream Plan account, you open it with $25 and the minimum deposit monthly required is just $25, which is something that's very doable. Sometimes we open savings accounts, and we have like this large goal, and we try to say every month I'm going to deposit $100, $200 without even really looking at our budget. And when we do that, we tend to take the money right back out, transfer it to checking because something came up. And so starting something small like $25 really helps. On top of having the $25 set up monthly, going into the account, when I know that I have extra cash, I go in there and make a deposit for him. But we're in 2026 now, and I've done the $25 a month every month, plus adding some money, and it's looking really good. So I'm very proud of myself to sticking to that 2022 resolution for that year.
Wow, and
Great
that's great
option.
advice. That's a great advice. Good, good. That's our dream plan. Okay.
Yes. Let's go on to the next slide, Mike.
Next
Here
slide.
we go.
Hey, Anna, I actually got a question in my personal queue, and sorry if you guys got it. Someone wants to know what's like the
fine.
primary difference between a dream plan and like a share certificate or CD with the credit union.
With the share certificate, those sometimes have a little bit of a higher interest. And on top of that, those require from the get-go, I want to say either anywhere from $500 to $1,000 just to get it started. So versus the dream plan, it's also high interest. It has a higher interest than just our regular savings account. And with that one, you can only start it with $25.
Oh, so a dream
So
plan is just okay, got it. Sweet. Thank you.
no problem.
Great. Okay. According to the Federal Reserve, a 2023 poll indicated that 54% of adults said that they had set aside money for 3 months or expenses in an emergency savings or rainy day funds. Similarly, a 2024 Bankrate poll showed that 6 in 10 U.S. adults are uncomfortable with their level of emergency savings. What that amounts to is that, sometimes when you're living paycheck to paycheck, it's always good to have an emergency fund that you can pull from in those emergency times. And now more than ever, Americans are realizing the importance of setting aside money for a rainy day. Most experts recommend starting with a goal of $1,000 before paying down interest date and then moving on to a plan to establish a 3 to 6 months worth of savings. Okay. The credit union emergency savings pays dividends on every dollar saved, and no minimum balance and no monthly service fees. Plus, it's very easy to set up monthly recurring deposits so you'll never miss the money in the first place. And as it says in here, you prepare for the future. We never know what's going to happen, and it's great to have an emergency fund. When you have an emergency fund, it's some place that you can pull from. If you have an emergency and you use a credit card, obviously later on you're going to have to pay back that credit card with interest. If you had an emergency fund, you could just take it from yourself, and guess what? Pay back yourself.
Yes, and I wanted to add to that, Mike. Sometimes when people think of emergency funds, they think of something like super traumatic, like something big that's an emergency. But honestly, it's anything as small as um your your car is having issues and you need it fixed, or an unexpected bill came up, or your phone broke, so now you need to go either get a new phone or have that phone fixed. So it's little things like that that are just unexpected. And so I can't stress enough how important emergency funds is. And I always tell the members that I work with that it doesn't hurt to start an emergency funds with just a few dollars a month or every paycheck, and at the same time work on paying down your debt. Like you mentioned just a few seconds ago, Mike, the goal is $1,000, and then really start working towards paying like high interest debt. And then once all of that's established, the rule of thumb is to have earned in your emergency funds 3 to 6 months worth of your living expenses. Okay, so we have emergency funds account here at the credit union, and we have the emergency funds, and then we also have regular shares that you can just use that account as well as an emergency funds account. But yes, let me move on to the next slide here for you.
Okay, well, resolution number 2, managing my debt. Okay. All right, go to the next slide. Now, we're going to discuss a couple of things. And I guess, for the most part, it's deciding how we would like to pay down our debt. The first one is the debt snowball. With the debt snowball strategy, you work on paying down your debt, starting with the smallest balances first, then move on to the largest balances. For example, let's say you have multiple credit card balances you want to pay off. You'll start by listing each of your debts out, including the total balance owed and minimum payment due each month. You'll then determine how much you can pay above and beyond the minimum amounts and put the extra payment toward the smallest balance first. The minimum amount is paid on each of the other debts while you focus on that single debt. Once the debt with the smallest obligation is paid, then you take the extra payment you were making toward the debt and roll it over to the next smallest balance. Continue to pay the minimum on the remaining accounts. Whew, that was a lot being said. Now, what that amounts to is that when you're picking out the ones that you want to pay down and pay off, if this makes sense, you want to go ahead and focus on the one with the smallest balance. And that's the whole thing about having the snowball effect, so that you can pay the minimum on the other items, if you can pay the minimum on the other items, and then focus on the smallest balance to get rid of that one. And what it does, offers motivation to continue on, because a lot of times when you're paying down debt, it's not like buying shoes, right, ladies, or buying a new outfit.
Hey, I know some guys that are shoe fanatics too.
So it's not the same thing. So what you have to do is offer motivation when paying down debt. And the greatest motivation is to get rid of a debt. And so if you focus on the smallest balance, you'll get rid of that debt, and then you can go on to the next one by doing that. And so that's what you want to do, because like I said, face it, it's not fun paying debt. And so you want to try to stay motivated. Now, once you're successful in paying off the first debt, then it's extra motivation for paying off the rest. Also, it's easier to put your attention toward a single debt that has a small balance than trying to pay extra on all the debts. It also saves you more money from paying interest in the long run. And you can check that using a website free called powerpay.org. Now, sometimes we might think, well, if I pay a little extra on each one of my debt, you'll notice that it goes very slowly. It looks like you're just spinning your tires because you're not really doing anything. But it's good to focus on that smallest debt first. Okay.
Ready for the next slide? Here we go.
Okay, now we're going to talk about the debt avalanche. The debt avalanche method does not necessarily provide an immediate feeling of satisfaction, especially the highest interest rate debt is the large amount, which usually happens. However, it is the most cost-effective strategy for paying down multiple debts because interest accrues each month on unpaid balances, specifically on revolving accounts like credit cards. You will ultimately save more in interest charges by using the avalanche method. And if you can tell by listening for what I said previously about the snowball, I prefer the snowball than the avalanche because I like to see something happen really quick. Okay. So that's my opinion.
Are you ready for the next slide,
Yes,
Mike?
next slide. Yes, most
Here
definitely.
we go.
All right, debt consolidation. With the debt consolidation method, borrowers take out a consolidation loan that is used to pay off one or more account balances, effectively refinancing the debt under the new loan. With a single loan to focus on, some feel like their debt repayment plan is more manageable each month. Also, most consolidation loans have a fixed interest rate and a set repayment term ranging from a few to several years. This structure makes the process of repayment predictable in terms of what is owed each month and the total cost of borrowing. Now, what I didn't mention, when you take out a consolidation loan, there is a credit check, and you have to make sure that you are credit worthy and that in order to get a consolidation loan. I want to make sure that's very clear.
Yes, Mike, and I wanted to add to that. I do get a lot of members that I speak to who want a consolidation loan, and a lot of people have this idea that because it's used to consolidate debt, that their credit score isn't checked, and honestly, it's just as if you were applying for any other loan. So you want to make sure that if that's the option you're going with, that you have a higher credit score. And then I also wanted to add to some debt consolidation. A lot of people tell me that they get phone calls sometimes about somebody calling them, or they saw online, or they heard on TV or something, about debt consolidation companies. And I wanted to take maybe just like 2 minutes to briefly explain to that for those who
Definitely.
are wondering. So there are debt consolidation companies out there, and they seem to be pretty popular. What they tend to do is they do help you negotiate the balance on your debt. They do help try to bring that down, or interest rates down. But the catch is that they wait until all of your debt, your credit cards, your loans, whatever, they wait until those are extremely past due, close to the point of charge off, of causing a loss. And then that's when they negotiate, because they know that at that point, lenders are willing to take, just any lower balance. It's easier to negotiate with the lenders. But in the meantime, by waiting so long, I mean, your credit score is just hit time after time for every single account. Pretty much your credit score is ruined. And yes, eventually you'll pay it off. It'll take a few years, but what you want to keep in mind is, where are you in life right now? Are you going to need a car loan here soon? Are you going to want to apply for a mortgage in a few years? So that is things that you want to consider before working with a debt consolidation company, because they'll pretty much mess up your credit score before they help you work on that. There are debt management companies. So you see how they sound a little bit similar. There's debt management companies. On the other hand, they will sit down with you and also try to negotiate balances and interest rates, but their plan is to work on the accounts right then and there, and immediately start sending payments to the lender. So just keep that in mind. And that's all I wanted to add, because I get that question a lot. So let's go on
Sure.
to the next slide.
Right. Well, let me just talk a little bit about debt consolidation
Mm-hmm.
too.
Mm-hmm.
Sometimes when I've worked with people and they do get a debt consolidation loan,
Mm-hmm.
what they do is then they pay off their credit cards, which frees up their balances. And then all of a sudden, because of emergencies or whatever, because they found something at the store they like, whatever the reason, they start to charge up their credit cards. And then we
Yes.
discover afterwards that they have this huge credit card debt again, plus the consolidation loan, which means that they're even further in debt, which really didn't help them at all. And so I just thought I'd throw
Right.
that
So pick wisely, right,
in.
Mike?
Yes, exactly. Exactly. Okay, the next one is on balance transfer. Okay, so for credit card debt, using a balance transfer may also be a good strategy. A balance transfer typically involves applying for a new credit card that comes with a promotional balance transfer offer. This offer typically has a low or no interest period for balance transferred from other credit cards. During this time frame, minimal or no interest is charged on the transferred debt. Borrowers can save a significant amount on interest charges when this strategy is implemented correctly. And I want to go ahead and say this one more time. You need to be able to, it's a credit check. In other words, they will check your credit, and it's not something that you would automatically get. Your credit will be checked. And so that's very important to note. Now, the period for promotional interest rate may be much shorter than a consolidation loan, which means higher monthly payments must be made to take full advantage of the low or no interest offer. If the balance is not paid off in full during that time frame, interest will be charged on the remaining balance. Some borrowers may get into a cycle of balance transfer, never fully paying off what is owed, and instead continue to find new balance transfer offers multiple times. So in other words, you get into a cycle. And that's happened with some folks where they every year they look for another credit card, zero balance, to go ahead and roll all their balances into that one. And then the next year they roll all their balances into the next one, and not really ever getting free of that, I guess that credit card trap is what I call.
Ready for the next slide?
Yeah, go ahead.
Here we go.
All right. Now, which method of managing debt would work best for you? And we talked about the snowball, the debt avalanche, the debt consolidation, or balance transfer.
What about you, Mike? Which one have you used before?
You know what? I think I've used everything because it happened when we first got married. I think I applied for every credit card and then every store card that was possible because when you need to buy furniture and do all that kind of stuff, that it was
Mhm.
just in big time and I was in big time debt. And so I like rolling over the balances for the credit cards, that and doing that. But then you had to find one all the time. I think the debt snowball afterwards, when I got into that worked for me to pay off the smallest balance first, and that worked to help me get out of debt.
Yeah, I would say that that's the one that I've used before and really helped me and really motivated me to, it was almost like a game to me. I couldn't wait to get my paycheck to go ahead and, apply some money towards my next debt and pay them off. I'm not patient enough to do the debt avalanche. That one tends to save people the most money, right? Because you're
Right,
focusing on the
right.
highest interest, but
Yes,
I don't
yes.
have the patience for that. I'm go, go, go.
Yeah, 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 exactly, exactly. All right.
Well, as they've come in, it's kind of been fluctuating, but as of right now, it's an even split. 42% both said A and B. And
Okay,
then we had an 8% that said debt consolidation and balance transfer. So it's like an even split down the board.
okay, okay.
Nice.
That's
Nice.
good. That's good.
So
Well,
I think
I hope I explained the first one good enough, the snowball one, because that's really the best one. But go ahead, Miss Anna.
so let's move on to resolution number 3, creating a spending plan. Everyone's favorite, right?
Yes.
So let's do poll question number 3. Do you have a spending plan? A, I do not have a spending plan. B, I have one, but I don't follow it. C, I have one and I use it every month. Let us know where you're at. And we should have had like a D, which says, I don't want to talk about it.
Yeah, I was gonna say I'd probably be D, or I need a
D.
D. I need Anna to like force me to have a spending plan because I love to spend my money on clothes and Abercrombie. So
Alrighty, as the votes are coming in, it looks like a majority, it's like moving as I'm talking. But right now,
Mhm.
64% said that A, they don't have a spending plan, and
Okay.
36% said B, they have one, but they don't follow it. So right now, 0% is in the C category. So
Okay. Well, perfect. Because you are in the perfect webinar right now talking to people that can help you. So let's move on and talk about it. So creating a spending plan. You see this budget sheet here? That is one of the most simplest basic budget sheets. You are welcome to walk into the branch and ask us for one, or we can email it to you as well. And once again, if you meet with one of us financial counselors, we will get to work on this with you. Once again, this is just like a basic sheet where we like to gather up numbers. It's not like the actual budget that you will be working with moving forward, but just to get a start, just to look at the numbers and get your math done. This is one of the sheets that we work with. So let's talk about a spending plan and what it is, okay? We call it a spending plan because we don't believe that, that you should or not have fun, with your money that you work so hard for. So yes, we have to focus on our living expenses and our bills and get all of that paid. But we also, we want to have fun with our family if we have a spouse or kids. And even if you don't, you want to be able to enjoy life and not like Dave Ramsey says, why are you at a restaurant if you have debt? You shouldn't be eating out at a restaurant. Like, no, that that is not
That's
a
not
thing
fun.
here in
That's
our
not fun.
department. No, we want you to have fun. We just want you to be able to organize everything and keep everything on track. So how do you get started with a budget? The way I like to work with our members, and I'm sure that's the way Mike does too, is that we ask them to gather their statements. On here, it says gather your bills and statements, but in reality, when you review your statements, the payment that you made for that bill is already on there. A lot of us don't even receive bills in the mail because we have everything, automated on automatic payments. So statements. And when I say statements, I say statements for every bank account that you have that you use. I talk to a lot of members where they use one bank to pay this, one bank to pay the other, and a credit card to pay this. Gather all of them up. Okay, so once you have all of those, you're going to get a highlighter and you're going to go highlighting each one, like categorizing them. Which one is groceries? How much do you pay for rent? On average, what's your electric bill? And when you gather these statements, you want to gather them for 2 or 3 months, okay, so that you can get a good average, because every month is not going to be the same for your electric bill or water bill, or maybe even the gasoline that you put into your car, right? So we want to get like a good average. So you'll gather all of those numbers, insert them on this budget sheet, or honestly just write it down in whatever you can. Visuals, pen and paper seem to work better and like motivate you to just keep writing. So record all of this, okay? You also want to record all sources of income. You want to record, your income. If there's somebody in that household that is helping you pay for these bills, you want to include their income. Any kind of income, make sure that you include it. So once you've gathered up your living expenses, debts, minimum payments that you're making on everything, and your income, do the math, okay? Subtract all of that from your income. Right here it says subtract everything until you come to a zero. Now, before you do that, okay, before you try to plug in numbers, before you get to a zero, I like to see, after you've paid your living expenses and after you've paid your debts, let's include just minimum payments right now, because as Mike said earlier, when it comes to paying off debt, right, we're going to focus on the minimum payments on all of them except for one. So when you list it on your budget, just do minimum payment. We want to see how much money you're left with at the end of the month, okay? So if you have a surplus, then awesome. That means that you're able to either pay off debt, add some money to savings, or spend it on something that you'd like to. I would rather you put it, or, plug in dining out and entertainment before getting to zero, okay, where it says subtract until you get zero, give every dollar a purpose. If you do the math and you see that you're breaking even, then you definitely want to come and sit down and talk to one of us. It's a completely free service for you guys. And I promise we'll get you there. So even if it's breaking even if you do have a surplus, but especially if you see that you're negative at the end of the month, you want to come talk to us, and I promise we will get you to where you need to be to make sure that you achieve those goals. Because if you're in the negative, then obviously we can't debt, right? And so that's pretty much what a budget sheet looks like, what the kind of conversation we would have in our first appointment. And so moving on to the next slide here, something that we'll sit down and talk to you about is prioritizing your expenses. So once you do the math and you see what you're left with at the end of the month, if you're left with, let's say, $300, right? We're not going to automatically just assume that we're going to put $300 into entertainment or go get some kind of subscriptions and just start blowing money. We're going to come back to this and have a talk about, what's our priority? What are you wanting to work on? Okay. And something that's very helpful is to, from the get-go, from the beginning of the year, let's start thinking about um, needs over wants, over luxuries. Okay. So what do you need? Okay. Food, shelter, utility. If you know that you have income taxes that you're going to have to pay here soon, let's start saving for that so that you're not digging into your savings or a credit card to pay things like that. Okay. Um, Low priority items are vacation, eating out, entertainment, um, cable. So all of that stuff, it's fun, but it's not super important. Okay. Once we've worked on all these other things that are very important, that's when we'll go ahead and start plugging money using a sinking funds, and we'll talk about that with you if you set up an appointment with us to start saving for those kinds of things. Okay. So next, if you are breaking even or if you are in the negative at the end of every month after you've done the math with your budget, we're going to sit down and talk to you about reducing your expenses. Now, Mike and I, we have a list of maybe over 100 ways that you can reduce your expenses, right, Mike?
Yes.
That we love to talk to our members about, but here's just a few because we're not going to take up 3 hours of your day. So eliminate or reduce cable TV, you know, the obvious. If there's channels you're not using or your show's over and you don't care to watch anything else, then cancel that subscription. Okay. Reevaluate your utility service contracts. Shop for cheaper home and auto insurance. That's a big one. Buy off-brand items. That's something that I recently started doing, like literally just a few months ago. I started just looking at the ingredients and seeing how the brand and the off-brand were pretty much the same. And it was like $1 or $2 difference. So I started just buying off-brand things. Use coupons. Groupon is awesome. Workout at home, that's something that I started doing as well because I have the equipment, but I almost considered spending $80 on a membership and I talked myself out of it. So I'll be in the garage later on today. Um, Buy used. I love thrifting. Take some time because you got to look through a lot of stuff, but hey, if you have it, that's always fun. Get a different car, purchase something cheaper, look for something more fuel efficient. So these are just a few tips if you see yourself in the negative at the end of the month. Let's move on to our next slide here. So ideas to increase your income. Okay, if you've already worked on cutting things out of your budget and trying to save more money here and there, here's some ideas to increase your income. Use your car for gig working, Uber Eats, explore part-time jobs at a grocery store, retail store. They have a lot of part-time positions open. I took on a part-time back in, when was it, 2020, a few days out of the week and on the weekends so that I could pay for my wedding. Um, and so it was expensive, but my husband and I were able to pay for that cash. And that's because we both took on part-time jobs. Make something. If there's something that you're really good at, you can sell that and sell that on Etsy. Offer lawn care. Lease out your room in your home. So if you're just a person who has available rooms, you live by yourself, or maybe you're not even home much, look into Airbnb or something like that. And then last, sell things that you don't need. I did this, what was it? Maybe like a month ago. I did a garage sale. I had a lot of stuff, baby stuff that I didn't need anymore. And so I did a garage sale with some baby clothes and just equipment and things like that. And before I knew it, my husband was against it at first. And he was just like, it's too much work. But next thing you know, he was coming into the garage and saying, hey, I found this. I don't use it anymore. You can sell it. He was just pulling out all kinds of stuff. We made $350 in one day,
Okay.
which was not expected. And so we used that money to buy Christmas gifts, right? It was in December. So, yeah, there's a lot of ways. You got to get creative. If you're in the negative, don't think it's the end of the world. And when you think about it being in the negative and having to work overtime or find jobs or sell things, that's temporary. Don't get all caught up in thinking that it's something that's going to be forever. I'm always going to be in a hole. No, it's temporarily. It's usually just for a few months until you get yourself out of the situation. Okay. So before I move on to talk about retirement, planning for retirement and the stages of life, which is our last topic here, does anybody have any questions?
We have a few questions in the queue. We're going to go way back to the beginning. Mike, can you please spell out the acronym for SMART again? Or I guess,
Okay,
can you go over that?
sure. Let me
Us.
get to it. Let me get to it.
Simple, measurable, achievable.
Relevant and time bound. I'm going to
Yeah.
go ahead
Well,
and put
it
Yes.
some.
starts specific is the first one. Specific, measurable, achievable, relevant, and time bound.
Perfect.
Yes, for sure.
Thank you. Thank you. And then
Yeah.
going back to emergency funds, is there a penalty to withdraw from an emergency fund?
No,
No, there's not.
No, and I will say that
not
I
for
have
that type.
definitely transferred some money from my emergency fund to my savings or to my own checking quite
That's what
frequently
it's for.
last year. Yep.
Definitely.
And then does the emergency fund account show up in the app to view?
Yes, it does. It
Yes.
definitely does. And it's very easy that if something comes up, if we're closed or whatever, you just get on your phone and make that transfer. So
Yes. And I think you can
it's
even rename it too. Like if you want to,
Mhm.
emergency fund specifically for your car or whatever. I think I had mine
Yep.
named for my car at one point, but yep,
Mhm.
very easy to customize and withdraw, transfer, all of that stuff. And
Yes.
somebody asked if we can please share the list of the 100 money saving ideas as part of the follow-up. Is that possible?
Um, yes, it's possible. We would have to email it to you separately because it's just a Word doc that we have. So, Sarah and Son, if there's any way that we can get that person's information, we'll love to share that with them
Yeah, I
separately.
think
Hmm.
they can request it in the survey after, right, Sarah?
Okay.
Yes,
Mhm.
we can
Okay.
do that, and we'll go ahead and send the basic savings plan sheet, and then I
Hmm.
can send that as well.
Yep.
And then somebody just asked, can you explain the dream plan share certificate again, that they missed it?
Mhm. I haven't looked into what the interest is on it right now. I just know that it's 25, it's high interest, higher than just our regular savings. Um, $25 to start it, and then it's required for you to deposit at least $25 every month.
Yes. And I will go ahead and link them the link to our website that explains a little bit more about the Dream Share certificate. That way they can check out the
Mhm,
rates and all of that good
mhm.
stuff.
And that is one of the type of accounts though that you would get penalized if you withdraw. And I want to say that it's only for 60 months, right, Sarah?
Yes, it is
Okay.
60 months.
Well, let me move on to the next slide. If we have some time left, we can answer a few more questions, but for the sake of time, just slide on over here to the next one. We're going to talk about planning for retirement. What age bracket are you in? This is all anonymous. Nobody's going to see for those of you out there that like to share that.
Yes, it's just to get a quick pulse of the rooms to
Hmm.
for Anna to kind of tailor the next part of the presentation.
Hmm.
And two, while we're waiting for people to chime in, guys, I know it can be scary thinking about meeting with some financial wellness people. It's a vulnerable topic, showing like your statements and things like that. But truly, me and Sarah talk about it all the time. All the financial wellness team and counselors, they're fantastic people. And we're not just saying with that because we work with them closely.
Thank
But
you.
truly, they're amazing
Thank
people and
you.
they're not people to be intimidated by. So,
Yes, for
We're
sure.
just like you. We've
yeah.
been through it all personally.
Exactly.
So 21% are in category A, 18 to 29, 5% are 30 to 39, 21% are 40 to 49, and the majority, 37% are in the D category, 50 to 59, and only 16% are 60 and above. But
Okay,
thank you for participating.
perfect. Thank you guys. Now, before I get it. We only have a few minutes left, so I'll go into each slide briefly, but I do want to let you know, do not panic. You can sit with one of us financial counselors to talk about where you're at and where you want to be based on your age. And we also have financial advisors here at the credit union that can sit down and take more of a deeper look into your retirement, because that's what they really specialize in. Okay. And I believe it's also free for you guys to meet with our financial advisors. Let me move on to the next slide here. So in your we're going to start out with 20s. In your 20s, okay? So what's going on in your 20s financially? I believe this is like the trial and error, stage of life where there's a lot of mistakes happening, a lot of learning happening. This is the time where you are able to do investments high risk. You have so much time until retirement. This is the time where you learn about the importance of an emergency fund, because as a young adult, you start experiencing life and unexpected, things that happen on a daily basis. And so you learn from your errors a lot. And like I said, this is a time to start building emergency savings. This is the time to learn about your 401k account, the benefits of it, and to start, investing in that and not leaving money on the table, because remember that the company is matching up to a certain percent. And so if you're not doing that, you're leaving money on the table. In your 30s, you begin transitioning out of the learning phase and into the earning phase. For that reason, it's vital to start saving as much as you can for retirement. Take advantage of resources to expand your investment knowledge. Partner with a financial planner to help fill your gaps in knowledge. If you have a kid or if you're married, now's the time to make sure that they're also included in your plans. You want to start an investment account for your children, save as much as possible, start talking with your partner about what retirement looks like for the both of you to make sure that you're on the same page. It's a great idea to talk to a financial, it is honestly for any stage of your life to talk to a financial advisor or counselor. Let me move on to this next one here. In your 40s, you're reaching your most promising earning years. In this decade, you should max out your retirement savings if possible and start reviewing all of your investment strategies. Financial advisors can help to review and update your estate planning documents, investment choices, and just all of the above. Also consider having some of those difficult conversations with your parents about their finances, okay? Like I said, we have financial advisors here at the credit union that will sit down with you and just see where you're at and how much more you need to invest to get to where you need to be in the of lifestyle that you want for retirement, because it's different for all of us. Um, and that is in your fourth. Let me move on to our 50s. If you're in your 50s, so you're probably in the prime of your earning years. Take full advantage of that and set aside as much as you can for retirement, including catch up on contributions. At this point, you'll want to work on eliminating debt and get into the idea of potential retirement spending plans. Just as a pilot and crew go through a checklist prior to landing a plane, this is a great time to start going through the necessary steps for you to securely reach your desired destination, the burning phase. So this is where you want to make sure that most of your debt, if not all of your debt, is paid off, so that that's not something you want to, think about and struggle with in your retirement, making sure that the money that you've saved for years and worked so hard for is going into things that you actually enjoy. So in your 60s, you start collecting Social Security. Okay, purchase LTC insurance, educate yourself about Medicare and the requirement minimum distributions at 70 years of age. Okay, get more strategic about giving if that's something you would like to do, and prepare yourself for the withdraw and spend phase of your life. This is a time to let all your grandchildren know if you're willing to babysit or not. If it's going to be for free or not. Yeah, this is awesome. Honestly, I can't wait until I am, not working one day. So, um, I know when you're very young, you don't think about this much, but you really want to start investing in retirement accounts so that you can be as happy as this couple here on this image.
Yeah.
And even if you're already like the couple here in this image, it doesn't hurt to once again sit with our financial counselors, financial advisors, to be just as happy as they are and comfortable with the knowledge that you're given. So resolution number 5, increase financial knowledge. That is something that all of you guys are already doing here today with us, okay? You're increasing your knowledge. Like I said, we talked about a lot today. Um, so just pick and choose here and there 1 or 2 things that you want to keep with you in 2026. We do webinars every Thursday pretty much for the most part. And so you guys please register and join us and come learn every chance you get. Here are some tools and resources. Financial wellness, that's us. If you go to our website, American Airlines Credit Union, we're under the education tab. Okay, so you can find all the information about us there. I'll share our phone number and email with you guys too, in case you want to go ahead and set up an appointment with us. But online, you can check what we do and also check upcoming seminars and webinars to join us. We have the Navigator. Okay, the Navigator is also on our website. What the Navigator is a lot of articles and really short clips for you guys to learn about all kinds of different things. It's really cool and it tracks knowledge gained. Okay, so it'll quiz you at the beginning and then quiz you at the end. And sometimes there's also prizes and things like that on the Navigator if you participate. Obviously our online banking app, through our online banking app, we have a new tool, which is a budgeting tool that I've tried already and it's awesome. Take some time to look into that here in the future. We'll probably add a few slides into our presentations to teach you how to use it. Okay, it's really cool. So if you have our app now, take a look into that. We have Savvy Money, which tracks your credit score. Okay, you can monitor that on there. And then here is our information. So there's a total of 6 financial counselors in the department right now, and we're already here and ready to help you with whatever situation you're in. Okay, so we help improve credit scores, pay off debt, prepare members for mortgages, all kinds of things. Okay. Our phone number is 833-346-9355. And that is our financial wellness at aacreditunion.org email. As soon as you send us information about wanting to be contacted, our lovely ladies who set up schedules for us will give you a call and send you an application to fill out real quick, and we'll get you with one of us as soon as possible. Button, is this for you, Sarah?
Yes, that's for me. Thank you so much.
Thank
For
you,
all of the
everybody.
information. Yes. So for those who are on the call and who aren't members and who would like to start their member journey, you can easily do so by scanning that QR code, and that promo code BD4412 at the end of your application will take care of the new member deposit. So you have nothing to lose. Plus, once you're a member, you'll always be a member. That means even if you decide to take another job opportunity outside the air transportation industry, you can still retain those credit union benefits and then even get to share the gift of membership with your family members, permanent household members, and coworkers who are eligible to join. And right now, to the end of March 31st, if you are an American Airlines or Envoy Air employee, whenever you become a member between now and the end of the March 31st, you'll be entered for a chance to win $1,000. And you'll receive a $25 new member bonus if you sign up for membership through JetNet or through the Envoy Air intranet site. So definitely take advantage of those offers if you're not a member already. And Anna, next slide, I'll go over some quarterly offers that we have and are promoting this month.
This one, this one.
Yes. Yeah, that one. Perfect. Thank you so
Mhm.
much. So right now our new year offers right now are you can save up to half a point percent annual percentage rate on your next auto loan, and you can enjoy a balance transfer promo rate of 1.90% APR for 9 months whenever you open a new Visa or a Visa Signature consumer credit card. And whenever you enroll in online statements by March 31st, you are entered for a chance to win another $1,000. But be sure to check out those details on those promos on our website at aacreditunion.org/offers. So I'm going to run through to see if we have any more Q&A questions before we close this out. And somebody's asking if the budget worksheet is under the financial wellness site. I don't think it's on there published on our website. But yes, on the survey, it'll ask if you'd like to be contacted or if you have a question, and I will definitely send that out if you complete the survey and enter your email. I can send the budget worksheet as well as the 100 saving tips that they have for us.
Right. And if you want to work on it, contact us for an appointment because we can do that with you.
Yes, and thank you, Brian. He says that the Navigator has some good budget spreadsheets and activities.
I love it. I watch those videos myself.
Yes, for sure. Alrighty, I'm not seeing any other questions. Sutton, do you have any questions or anything y'all are seeing I'm missing? Nope. Alrighty.
I just want to say Happy New Year, everybody. Thank you for joining us and for taking some time to learn something new, hopefully, with us. You're more than welcome to reach out and hopefully have a one-on-one with one of us. Have a great rest of your year, and I hope you achieve all of the goals that you've set for yourself this year.
Thank you. Thank you.
Thank you.